Property IQ with R&D, research and development, or research and fun. David, that is. So Randy and David here to launch. Property IQ is here with DDK. So I have our special guest, and now going to be our mutual podcast where we're going to cast together with some special guests beyond just us. Um, David Contreras, he's the CEO and founder of DDK. Over a 10-year relationship, and he's come to our meeting initially as a sales consultant, sales rep, or specialist, if you would, in the industry of default, um, and also valuations. And now he's got in the loan business as well. So that said, without further ado, David Contreras.
Good morning, Mr. Fernando.
Good morning, David.
It's an absolute pleasure to share the airwaves with you. Before we get too serious, I just had to throw that out there. It is always a pleasure to share the airwaves with you. There is so much to talk about. It's almost where do you begin? Our market is, the real estate market's red hot. But if you follow the market, that change is on the horizon. And I think we can both agree on that. But before we get into all of that, thanks for having me. And, initially, yes, I'm the CEO and the founder of DDK Mortgage Solutions. We were created and founded, back in 2008 as a result of the crash, the famous crash of '08 in the mortgage industry. If you were around the industry or in servicing or in default or any of the numerous directions the business or the industry has, you're real familiar with the time of 2008 and all the casualties and everything that happened as a result of that. But the good that came of it for me was the birth of DDK. And so we do hard money, private money, if you will. But that's all we do. We don't dabble in multiple other things. We just do one thing, and we choose to feel that we're really good at it.
And really quick, DDK, can you tell me where that name came up? Obviously, I know it's Dave.
I wanted something that was going to stand the test of time, and somebody that would be able, or something that would be able to relate directly to me. And so,
all right, back to so you came up with the name DDK based on family heritage, the children, and at some point you want to be able to have them to share in the wealth and be a part of the success of the company. So continue.
That's why it became Mortgage Solutions, because what I wanted to do was be able to provide a service that was more solution based to the marketplace rather than just another private lender out there. We wanted to have some meaning. We wanted to have substance behind what we're doing, and carrying on that same mission statement as the years went by. And so here we are now. We fast forward to 2021, and I feel that we firmly have our thumbprint in the marketplace for our particular piece of the pie. So through the years, when you stay in one particular space for any length of time, it's pretty easy to go or be swayed to go in different directions. But we've continued to stay the course. We want to do private money, and that's all. And so that's what we do. So regardless of what comes to us, whether it's a simple refi or an expired loan, or it's a simple cash out loan, or it's a fix and flip, or it's ground up construction, or if it's a little more complicated and it's a loan in default that needs to be brought back current so that an investor can save their property, then that's what we want to be known for. We want to be known as the private lender that can be more of the solution based rather than thank you for the look, but this isn't something we can help you with. But with that being said, Randy, as we talked this morning, in the next couple of weeks we're going to have a major announcement for the company, where we are going to really take this not one level forward, but two, almost three levels forward. So,
Look forward to
so
hearing
for our
about that
audience
announcement.
our audience that's looking to, how our two companies came together and how we tie together, and the value that both of us add to the marketplace, we're getting serious as the market, at some point is going to soften, and we're going to start to see the other side of our industry, here pretty soon with mortgage rates and default as a result of the pandemic. We're going to be well positioned to provide even more solutions to the marketplace. And so coupled with, our relationship with PIQ, I'm really excited about the direction that we're both going. So with that said, I'd like to turn it back over to you.
That's a lot of information you packed into that short version of it, but ultimately it's solution based. It's to help organizations as well as private parties that are either looking for secondary or alternative funding to take care of whether it's a default case or whether it's a situation where they're coming out of bankruptcy, right?
Right.
And these are all solutions to help them, the ones that have been turned down, really. A lot of the times that traditional lenders and big banks, especially now, they're worried about the scarcity and the changing market, volatility between the ups and downs. So it's an opportunity to be able to say, here's the short stop. David, I believe, if I'm not mistaken, you can speak a little further, that you have a direct underwriting process. It's a little bit easier to get approved as opposed to the institutional lenders. And that makes it a lot easier, right? To get a refi or get a loan, or somebody that's in what we call distress case scenario. There's either a tax sale, and we can talk a little bit more about the specialized subjects. But right now, just to focus on the company, DDK has been in business for how long?
So we've been actively doing closing loans since 2008. But you bring up a great point, Randy, and that is, one of the things when I go to, well, I used to go to mixers quite a bit, where I get a chance to get out and pass out business cards and, talk to, fellow peers and agents and brokers and people in our industry, but since the pandemic, we've gone to a Zoom world, and
That's
so,
right.
people, a lot of times they'll say, great, that's great. You do hard money and what is it, why should we use you, and I always tell them, the flexibility to work with a private lender. I mean, we can really go deep and just into that one word, flexibility, and what I really mean by that, if we take another step forward from there, is that unlike traditional underwriting, when you go to the bank, a borrower can bring a good FICO score, they could bring, stability, they can bring length of time on a job, they have low debt ratios. They've got their credit report indicates that they've been granted credit and that they maintain the credit payments, they don't have lates, and it's a perfect storm. In our world, it's the exact opposite. What we're concerned with is, how are the payments going to be made, and rather than underwriting the borrower or borrowers, we underwrite the asset. So what are we going to loan on? Is it single family? Is it a duplex? Is it a fourplex? Is it commercial? How does it pay for itself? Is it a income producing property? Is it a rental? What's the strategy? Are you going to fix it and flip it for profit? We want to know what that is. And, the more that we know, we can write the better loan, because ultimately, especially on a fix and flip, or if it's ground up construction, we want the borrower to succeed, because if they succeed, we succeed. And then ultimately they can come back to us because they proved that they did what they said they were going to do. And naturally we win. So we want to work with them again. And, a lot of times in our industry, you close a real estate loan and then you don't see that borrower again for quite some time. So, by getting to be able to learn a little bit more about what they do and what their strategy is, and you can incorporate different programs and let them know all the various programs that we can do. so that it gives them more flexibility and wherewithal to go out and look for other properties to buy or good deals that might come their way, that if they didn't know they could get capital from us, they might pass on the deal altogether. So it's just a matter of talking and sharing what we do and sharing success stories. When you are able to take a loan that's in default, for example, it's a little bit more riskier loan. There are a lot of lenders that don't want to touch that scenario. But in our world, and with our company, we do. We're not afraid of it because we understand it. And so, we'll take that scenario, and we just dig a little bit deeper. Tell me what happened. Is it a permanent or a temporary situation? We ask those 3, 4, 5 serious questions. And then once we know the story, we help them out. And, that's a loan that a lot of lenders will shy away from, but we'll close it.
See, David, there's a lot of stuff that you covered again, and I think it's as we go down, we're going to be doing more and more breakdowns of just the terminology you're using, like hard money, distress cases, bankruptcy, all that stuff. We're going to be doing on further podcasts and also put it out there for Q&A. So for right now, it's just really to get the introduction to DDK and the other available resources to those that are looking for alternative funding. It's a great opportunity to connect, as well as any questions that we have as we go down the line, as we go more and more live with these broadcasts. It's going to be helpful to our audience that are looking for those resources or services. So then on our next podcast or our next video broadcast, we're going to be talking a little bit more about the coming together of PIQ, the inception of Property IQ. Really, I always say Property IQ, David, as you know, it's what's your property IQ? And we all talk about the elementary skills of knowing the terminology. And it is a different world for lenders. And sometimes the average borrower gets intimidated by these fancy words. We want to keep it very elementary, give the listeners an opportunity to ask those questions and be able to respond, so they have a comfort level to approach without having to feel like, oh, this is a whole different class. But the good news is we're here to help educate, build that audience base that will be able to benefit and have a guidance or have a resource for all those questions out there, and be able to help those that are going through those times as the adjustment to this market it's coming fast. Economically, financially, I think we're all seeing a lot of forecasts that are coming up that sounds promising, but unfortunately rates are going up. And the alternate to that is being able to have a great resource to not only do the R&D, research and development, we call it, for Randy and David show for Property IQ. And what is your property IQ? So next week, be prepared. We're going to be touching on that a little bit. That said, David is going to have a few announcements as well. I'm looking forward to the expansion of DDK and how that could benefit those around you that are going through some type of real estate challenge, and how we can fill that need. That said, David, anything to close?
No, I thank you for your time, and I look forward to our future episodes. So all of our new listeners out there, I invite you, to follow us and to continue to tune in and provide us feedback. Tell us what you want us to talk about. If there's questions or topics that you feel you'd like us to dig a little bit deeper in, we want to know that. And we would certainly appreciate the feedback as we roll forward.
Excited. That's great. I'm looking forward to working with everyone here that is listening to the broadcast. And yes, this is our first one. So you could say in the inception, Randy and David with PIQ, we're together and excited to be a part of not only joining the broadcast club with Zoom, but to be able to give you resources and a great tool as we progress through this economy. That said, R&D signing out for today. Have a great week all. Thank you.